Hello, crypto bag holders and when moon orangutans. Hope everyone's having a blessed weekend. This video is going to be a little bit different. So you guys know me for crypto analysis, but today I'm going to look at Euro USD. I've kind of distanced myself from crypto lately. My trading, to be honest with you, hasn't been going too well with crypto. I noticed that a lot of the trades I'm entering, they're getting stopped out. So right now I'm just looking for consistency and clean charts. And for me, it seems like FX and TradFi is moving a lot cleaner and smoother. So I'm going to be focusing on a funded challenge right now for Euro USD and potentially some other pairs. But here's my analysis on high time frame. We're going to go through Euro USD, start with the weekly. So if you zoom in here, here's your weekly chart. You have a dealing range on the weekly from this high to this low. That's your swing high or peak top in this cycle for this year up to here. This is your swing low. So if we're looking at the weekly liquidity model, basically we've retraced 61.8% of the move. So anyone who's getting shorts, they're buying shorts for discount above 50. Anyone who's going long in this range, you know, they're paying a steep premium for their long. So usually smart money, especially with a highly liquid asset like a Euro USD pair, they're typically going to be shorting in this range. And you can see that's the exact pivot at 618. So now that we know what our dealing range is on the weekly and we can see a very clear pivot, the next thing to do is really zoom in on this fractal from the low to high. And what looks unique here is you have a 3-drive pattern. So I'm not sure if you guys are familiar with it, but I'll just go through the basics. So the idea with a 3-drive pattern, you're in an expansion, but usually what you'll find is every drive up gets a little bit more exhausted, and then at the top you'll get some sort of a blow off where basically there's very little consolidation like here, but rather you get a very high voluminous move at the top, and then it basically immediately gets sold off. And you could see the difference with this fractal here and this one and this one. So here there was a couple weeks of selling, a week of buying, week of selling, buying. So it's kind of sporadic. There was it was indecision between, a month and a half, 6 weeks. And then here you had 3 weeks, 4 weeks of selling, but then it immediately created this indecision candle and then engulfed, and then you had good follow through on this swing low. Here you have 11 straight weeks of selling. So obviously people are looking at the macro structure from swing high to low in this dealing range, and everyone's come to the understanding, okay, this is the top. Let's just start selling. People were accumulating shorts in this range. So this 3-drive pattern is typically what's really going on under the hood is you're getting shorts are being accumulated and they're just getting ready to sell off. And you can see where it pivoted. There was a huge volume imbalance here and a weekly imbalance here, which I'll detail in a minute. But the idea on this weekly liquidity model is you've hit your golden pocket and reversed. You've had really strong sell pressure and following through on the weekly. Your RSI is coming way down. At some point, it'll get oversold like down here at the lows and then potentially reverse, but there's still space for this to come down and sell pressure to continue. So right now, it looks like it's resetting a little bit on the lower time frames, like 3-day, 1-day. But what it did, which is a footprint for anyone paying attention, is it's created equal lows, relatively equal lows, which to me is engineered liquidity to help fuel the move down to the actual target, which is going to be this weekly PD array. So this internal imbalance, they only nicked into it here before the first drive up on that expansion, but there's still all this to be rebalanced, right? So for me, the obvious target, now that there was a clear reversal at the 618 after taking these highs and then taking all this internal range back, the obvious target for me now becomes the internal range. And again, if you're looking at a weekly liquidity model, you're looking for an external raid, which happened right here, into an area of interest, 618 or OTE fib, volume imbalance, and then a weekly order blocks. So it basically was the perfect area to sell. All the signals were there on the weekly, which is why I love FX. I'm starting to see that it trades way more logically and less erratic than crypto does. So now you have these equal lows, which is the draw, but it doesn't mean, because it's on the weekly, it doesn't mean that there isn't going to be intraday buy pressure, which I believe there is right now. And I'll show you a lower time frame model in a moment. But the other thing to note, much like the swing high to low here that correctively retraced to the 618 or the OTE fib, I have another one here. It's a custom fib I'm using. It's also the OTE, and you can see the internal is right inside of it. But also I've switched up the 618 to the 58.5, you'll note, just because I'm going to be trading low time frame, 15 minute, 5 minute, 3 minute, and 1. So the idea is I don't want to get front run. I noticed with my back testing, 618 gets front run, even 60 gets front run in Euro USD. So I find that 58.5 is, from my testing, a pretty good balance where you could front run the front runners. But anyways, that's the target to the downside. Now, how could this wave structure evolve? So the way I'm looking at it, when you zoom out, a lot of people know me as a harmonic trader. Obviously, I've developed other parts of my trading arsenal, and right now I trade mainly smart money ideas and liquidity models. So it doesn't mean I don't use harmonics. It just means that I'm developing myself as a trader, and I'm noticing patterns that are going to help me. But it doesn't mean you discard some of the ideas that you've learned that actually still hold true today. These harmonics, they were developed by Scott Carney in the 90s, and he used to do a newsletter every month, and they were modeled after TradFi, so equities, indices, and currency pairs. And he would basically be analyzing the weekly and monthly wave structure to identify deep premium and deep discount where the market could reverse. So the idea is, now that we've created wave one and we've pivoted the midpoint here, we do have a valid harmonic structure that's developing. This is, in TradFi, this is the Bentley of harmonic wave structures. It's a textbook Gartley. And you could see, based on the drawing here, you have your first impulsive wave down, correction to the 618, and then you form a higher low somewhere between the 382 and 886. So I'm targeting the 618 just for a reciprocal wave here that would project out to the 1414 basically, or the middle between the 113 and 1618. So ultimately it's still going to form a lower high. Well, it's going to be a higher high than here, but the macro monthly structure, it's still going to be a lower high. And it could, if there's a continuation, so be it. But just based on this, if I'm expecting a reversal in this internal range over here, this would be the projection target over here to the 786. So that's your weekly harmonic. And what I'll do is drop it now into lower time frame just to show you in more granular detail what I'm looking at. So again, here's your footprint for liquidity. If you're mapping liquidity on your chart, what they did is they took these stops over here. Then they took these stops that were accumulated in this range here, but you could see the draw was still lower. They took this one right here, but they stopped it above this low. So you got to ask yourself, in real time, if you were trading and this low formed here and you entered here, most people would have put their stop below this low. So now on that corrective retracement down on this weekly candle, there's some people in this fractal over here that were entering in the midpoint. They're buying in premium, or they didn't buy the low and they just started to join trend by week 3 or 4. Those guys are not likely to have put their stops here just because the risk was too high. So they probably put their stop here and then got taken out right there on that wick. So they become forced sellers into resting bids that were just below that. And then they pushed it up again, And you could see the same fractal pattern on the weekly. So one candle that took out the previous 3, 4, 5 weeks of uptrend, but for only one reason, to take out all the lows accumulated here and leave behind some engineered liquidity for the future. So all this was in order to fuel the move up to take the highs and then start the 3 drive pattern. So on the daily, it's very evident that anyone left in their trade that basically entered here and put their stop here, this is your liquidity pool waiting below this right here. So now you have 3 liquidity pools engineered at these lows. So that's going to be the obvious draw, and you're only looking for shorts at this point. So that's the daily. Now we'll jump into the 1 hour just to show you how, even though on the daily, weekly, monthly, you're bearish, it doesn't mean that you can't get a long in during the week or intraday. So the first thing to focus on here, you'll see I have a daily imbalance. If I just take this off, you'll see that locally, every time there was a break of structure, there was a massive push down. So one candle that basically they faded everyone's stops over here into the next level. So if I just cue back up that right there, you'll see the daily imbalance. And it shows that this corrective wave from here to here, all they were doing was moving it into premium, into the 618, and then rebalancing that daily imbalance. So that was your target. And then it launched what I believe is a market maker buy model. For those of you unfamiliar with this model, all it is really is a cluster of Darvas boxes or ranges where it forms a range high and a range low, and then it expands into a new range. And it could do the same thing on the flip side. So on this side of the curve, you're on the sell side of the curve. This side, you're on the buy side of the curve. And basically, the algorithm is delivering to the buy side. So if you want to buy, there's unlimited liquidity for you to buy, and market maker and the algorithm is going to sell it to you. But in this market maker model, the idea is same like on the weekly liquidity model. You have to have time alignment. So the idea would be on the weekly, you're looking for a 4-hour market maker model. So if it's a weekly imbalance, they got rebalanced here. You're looking for a 4-hour market maker model to form with very obvious ranges within the Darvas boxes, right? Now, that was a daily imbalance. So if you're aligning time with this array being rebalanced, daily, you're going to push it into a 1-hour time frame for the market maker model. And you could see it, it's very visible. That's your original consolidation. There's your accumulation 1. Sometimes you get 2 levels. Maybe you can call this the first Darvas box, second, third. And then you're looking for a smart money reversal that's going to take an external low. This is why I believe the move is not done. So if you just zoom in, this was that external low, those equal lows, and they stopped price right in front of it. So that's your inducement low. Any longs here, these are just scalps. They're intraday scalps until you hit that high and rebalance this candle right here. So you could see that's what happened. Basically, price pushed up, formed a 4-hour order block, a bit of a breaker here, and then use that breaker and order block to push up, take the external, rebalance this candle, and then immediately reverse. So my invalidation for this market maker model would be if price came back into this H4 breaker, H1 breaker. I don't know why I have H4, but that's an H1 breaker. That's basically a previous bearish order block that broke down. It didn't take liquidity, so it's not like, I'd call it more like a supply zone that got violated here. But like a true breaker, you want to see it take a significant low on that final push down and then shift structure. So, I mean, you could call it supply, call it a breaker, whatever you want. Point is, this area should get supported if you're in bullish delivery again. If not, and it starts to inverse the mid, so if you just fib out from wick to wick, or you could do candle high to candle low, however, like I've heard a million ways of doing it, but the idea would be just find a mean threshold of your breaker and find a mean threshold of your order block. And then if you see it start rejecting the mid and inversing it into a bearish structure, then you can anticipate these equal lows getting tagged out and then the daily equal lows next. And you would expect the model to hit its climax and then start a new buy program right after that. So the idea, like I posted this on X last week, but the idea would be take this external rebalance and then start the push down, invert this, right now it's a bullish PD array, but turn it into bearish structure and then immediately rinse the lows and catch a bounce. So like if you see strong displacement after this low gets rated on the daily, then I would look for some bullish structure to be created, kind of like this. So this fractal right here is this high, higher high, take the external and then push down. So I'm waiting, we're in this part of the leg right here. What I'd want to see is immediately get bought back and then reclaim this level that was the inducement level before pushing up. And then look for a break of structure, potential breaker in here or an order block to form. And then that's where you can look for the final push into this area of interest, clearing out the original consolidation. Now, it doesn't mean that that's where the move would end, but that's my general target if you're going to zoom out. Again, it doesn't have to just take this high and die. It can also come for these highs because they don't look protected to me. They look like open descending wicks. So for me, that looks like a potential target if there's enough push on this move, and then rebalance what's left in this balanced price range. So this move could extend a little bit higher. But again, if you're looking at a dealing range from that wick to where I project this is going to reverse, that's again going to fall into your OTE or your golden pocket. And then I'm looking for it to short basically. So that's the lower time frame picture. I look for this week to have a nice push up and then one final push into a daily breaker over here and then die. Also, there's a daily order block here that hasn't been tested. So maybe what it does, it pushes into it or even into this imbalance. And then there's a breaker over here and then it would die. And then I would look for that larger push down into the weekly imbalance here. So that's the Euro USD update. Hopefully, I know this is a change of pace compared to all the shitcoinery that I've been doing videos for, but the idea is just like all assets more or less honor the same algorithmic trading principles. So hopefully this made sense. And if you have questions, just reach out anytime.